everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, please keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to bring you profit. So you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard as we go through some possible trade simulations within the session. And you'll see there are features built into the order window within our app and web trader that really make the risk management side of things quite a bit easier. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now from our main website, we can log into our web trader, which allows you to trade on both MT4 and MT5 accounts from one location. And also our app works the same way. Now, as we log in here in the upper right, then we'll find ourselves here in the web trader. Now, I know the focus this evening is technical analysis, but we always want to talk a little bit about what's happening fundamentally before we go into that. Now, there were some numbers out of the European Union showing maybe possibility of economic slowdown, kind of matching what we've seen out of the US, the UK. Some of the numbers, while it's nice to see inflation coming down more than expected, there are some worries maybe out there about potential economic slowdown now beyond just bringing inflation under control, but maybe some recessionary type numbers that we're seeing out of the US and other places, and now some numbers I think out of the European Union today may have triggered some fear as well. So we see a bit of a sell-off on the equities today. By equities, I mean the stocks, the major indices, maybe a strengthening of some of the safe havens. Nothing major in that regard, but we do see a bit of a sell-off on the stock markets. So there are fears about other things, maybe tensions in the Middle East, tariffs to come from the US on different nations. And so there's some anxiety about those things as well. So we can keep that in mind as a backdrop as we then start to look at some charts, maybe look at some technical signals. That could be a good spot to start, by the way. Maybe we could look at a major index or two and see what were the signals so far today and where do we stand in that regard. We see this buy signal went bad, and this is where if you pay attention to the fundamental news and you see what the sentiment is, you can avoid some of these signals. But at the same time, you see that the backup scenario here, the sell scenario, if it does drop below 57.95, they were saying expect further downside, that then it might drop to 57.70 or lower. And that's exactly what happened. So the primary move on this signal was a buy signal, but also it told you that if it dropped below the pivot line right here, that then you'd be looking at a sell. And so if you initially bought with your stop loss below the pivot and you had a pending order on the other side of the pivot to sell, then indeed you'd have taken a small loss on the buy signal and then been in on the sell scenario and already hit the take profit line. You see we've already passed the take profit suggestion there for the S&P 500. It already hit that take profit zone. It seems to be sitting there thinking about going further down, but already hit that first take profit on the sell. And so that's a prime example of what a support level can indicate. In this case, they're calling it a pivot line within the signal, is that it can be a change in momentum. And a lot of times you can draw those lines, and maybe it'll be more clear in, say, 30-minute candles. You can draw some of these support and resistance lines, and we can see that here. If I want to draw the line technically, what Trading Central was looking at, and you can see that there was an area of support right in this area here. Okay, and so as you look at these support levels, you can see in general it found support around this price. Okay, and the signal was to buy from above the support level, but also telling you that if it drops below that price level, then expect maybe rapid dropping towards these next price levels. And so when you have your support levels and you trust to buy off of that, given if you don't believe the sentiment is working against it, which today it was, then you can buy off on the buy signal, but also be ready with your stop loss below the support and a pending order ready to go the other way. And we can see that it looks like that would have worked out pretty nice here in that regard. Now, as we go down, we see some other support and resistance levels. Okay, and so this is down around the lower end of this take profit zone and the sell signal, down around 57.40. I drew it at 57.65, but you can see that 57.40 is just down here near this next support level, which is the top of this gap coming out of the weekend. So this was the close on Friday. This was the open Sunday night / Monday morning. And so the top of that gap is a natural support where it hit and rose from there. So this looks like this signal is telling you that this might try to drop down to this open price for the week. Okay, and it very well might do that. From a technical perspective, if it breaks this support level, which is where it's sitting right now, this was resistance, resistance, okay? So if it breaks below this price level, then it looks like it's clear sailing down to the next support level from a technical perspective. So is this something I'd be buying on? Probably not. It's a sell signal that went bad. It has negative sentiment now on the day with momentum on a downtrend. Down, it doesn't mean you can't catch a bounce up, but right now this is a solid downtrend, and the signal even tells you the sell scenario was in play and still is, and it has not reached the bottom of the take profit zone on the sell signal. Okay, so this is how, even if you did the buy, you can limit your risk on the buy signal, technically speaking, by using that pivot line as a spot maybe to get your stop loss below, and an entry as well for a pending trade in the opposite direction, which looks like it would have paid out nice here. Potentially we could be looking at least a temporary bounce off this support level here, which was the first take profit line in this signal. But it's fighting a strong downward momentum right now. So we're looking here in 5-minute candles. That doesn't look convincing to me. You might catch a spike up, but it very well could just break through the support level and head down to that next level. So that's something to keep in mind as you're looking at these signals. Think what is the current sentiment, and does it agree with the signal? And in this case, you probably would have avoided the buy signal if you were paying attention to the most recent news, and maybe looked at the secondary sell scenario on that signal to have a pending order below that pivot line in case it did confirm a downtrend. Now, we could start to look at some other areas. If we wanted to look at a currency pairing, okay, first of all, I'm sure there's a signal. Euro USD typically has one. We can take a look at the signal. It was a sell signal that already almost came to the take profit zone. It's not quite there, but it almost got to the take profit zone on the sell signal. It stayed below the pivot, and so this signal looks like it was working out well, but ran out of momentum here. So it looks like maybe the downtrend has died out on this Euro USD. And let's take a look then, technically speaking, if we can find something here. Now I see on the 1 hour or 1 day candles that this is quite a support level here. Let me get rid of some of these other lines. Okay, this is a resistance at the top of the 1 day candles. We see it hit this price here and dropped, and then over here hit it twice, dropped, hit and dropped. And we see it's bouncing off this 1 day candle support. If you follow it across, that's exactly where it bounced from, back here, 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 and found support and resistance at the same spot here as it went above and below that price. So this looks like a pretty important level on the 1 day candles. So if you wanted to try and bank on a rebound here, that this might go back up, technically speaking, you got a pretty good look here on the 1 day candles. I would only need my stop loss to be here, to be below the 1 day candle support, and my take profit could be up near 109.50 or so without having to break this high point on the resistance level. Okay, and I'm cheating that down just a hair, this resistance level, because I'm looking at this spot here too. So maybe below 109.45 if you wanted to try and go after a take profit up here. Now, because there is volatility and there's still a bit of a downtrend showing itself on the smaller candles, what you could do in a circumstance like this, if you feel like you think this support level would hold because of what we see here and over here, and you're also thinking about the fact that there's been quite a slowdown in the US with inflation dropping faster than expected, and maybe it's more likely that the US might lower interest rates soon, you might trust this support level from fundamental reasons and also technical reasons. This looks really nice as a one-day candle support. And usually you lend more credence to a one-day candle support rather than, say, a 5-minute candle support, because this has been here for weeks and months, this support level acting as an area where the price tends to bounce back up many times in the past. Okay, so let's say you're sold on this being a good technical entry point, and then you think the fundamentals in the bigger picture might work towards the USD weakening if indeed they're close to lowering interest rates again. So if you feel the fundamentals back up this nice technical support level, then it's a no-brainer maybe to do a buy on this. So I'm going to simulate that trade, and we can do some risk management in a couple different ways. First of all, I could put my stop loss down here below the one-day candle support, which would be this second line that I drew, 107.46, let's say. Okay, so 107.46. Okay, then I decide take profit just before this resistance up here in the one-day candle, so 109.40, let's say. That's quite a number of pips, right? On the one-day candles, it doesn't look that far, but that's a couple hundred pips plus, something like that. Now I'm looking, I've got my take profit determined by the resistance level up here, okay? My take profit's right about there, just below the resistance level. My stop loss is also determined by the technicals just below the support level. And now I'm looking at the ratio. It's better than 4-to-1, or about 4-to-1, not quite 5-to-1, potential profit compared to risk. Okay, then I'm saying, all right, nice ratio, nice setup, technically speaking, opportunistic spot to get my stop loss below a nice support level with very little risk compared to the potential profit without having to break the resistance to take my profit. Okay, so the technical sets up nice, and that's why we end up with this ratio, is because of the opportunistic entry point, if indeed you believe this support level could hold. Now what we look at then is what trade size should I take? Okay, I've already determined where I would exit both on the negative end and the positive end based on the technicals. And now I need to adjust the trade size then to be the amount of risk that I'm comfortable with. I certainly wouldn't want to risk 10% of my balance on one trade. I mean, you're welcome to do that if you wanted to, but in general, that's a high risk proposition to maybe risk that large of a proportion of your balance on one trade. So now I start to adjust the trade size because I want to risk the amount that I'm comfortable with this technical setup. And so with one lot, I'm going after over 1,500 profit. I'm risking less than 400. Okay, and so maybe I'm comfortable risking 500 per trade, which is a little less than 1% of the balance I'm working with here. So then I know I can go a little bit larger with the trade, 1.1, maybe 1.25, and I start to see I'm zeroing in on around 1% risk. So 531. That's almost exactly 1% of my balance. Okay, so maybe I'm comfortable with that. I'm going after over 2,300 profit, and that's one way to set this trade up. So I'll put that in action. And so now I know the technicals are on my side. I've got a nice one-day candle support that's been confirmed back here, and then again here and here, a breakthrough, and then acted as resistance on the bottom, and then a breakthrough back to the top, and it acted as support once and twice now today so far. Okay, so the technicals are there for the move. The fundamentals maybe are there, but you might be thinking, what's another way that I could risk manage this? Because right now we just used a stop loss. And because it's still a downtrend today, maybe it's gonna break, hit the stop loss, then go up. And then we're gonna be upset that we lost in the short term, and in the longer term, it went up the right way. So another option for risk management, when you have a nice technical setup, but you're not sure about the timing, you're not sure, maybe it might test the support a bit before it decides to go up the next day or two. So then I could do something like AvaProtect. Let me lower the trade size. And let's take a look. If I wanted to do a couple days protection, let's say, you can protect by the hour, you can protect by the day. I'm going to do a couple days protection, and I can look and say, okay, that's less than, or it's around 0.5%, less than 0.5%. So I can even do 2 lots. And now it's the same level of risk almost exactly that I risked with the stop loss. Okay, but now it's the cost of the protection. I pay that up front, but now I can wait up to 2 days. I have my expiry on my protection. And if in the short term, overnight, it goes down, hits my stop loss on that other trade, this trade will keep going. And if it crashed all the way down, the protection pays me all of that back. I'm only down what it cost me with the protection. And so now I can afford to not put a stop loss, at least until I get to the end of the protected time period, which is listed here. And then I could add a stop loss if I wanted, but maybe I've already closed in profit at that point anyways. But I can protect for, in this case, about almost the exact same amount of risk for the cost of the protection as I was risking with my stop loss on the first trade, but now I'm diversifying how I'm protecting. And for 2 days, I don't have to worry about hitting a stop loss or something, and then it goes the right way. It could go 100 pips the wrong way overnight tonight, hit the stop loss on that other trade, but this one will stay open. And in a day and a half, maybe it's all the way back up after it tests the support and goes up. Okay, I can be more patient without risking more money when I set it up this way. Okay, and where do I want my take profit? I can still look at the same take profit up here. 109.40 is what we had said. So look at the profit potential, over $3,300, and a lot less for the cost of protection. Okay, so I've diversified this move with 2 different types of risk management. And honestly, I like this second one better because I still view this as a downtrend. In the short term, it's downtrending, and it's likely to hit the stop loss, at least with a temporary break of the support level, before deciding if it wants to bounce back up. That's kind of how I feel about it. And so I think it will continue to test this support. It may or may not spike down before potentially making a move back up. We'll see. And if it breaks this support and crashes, neither trade's going to lose more than little less than 1% of the overall balance, with a much better potential profit. But I think what we might see is the AvaProtect trade lets us hang in there longer and wait for the change of the trend, compared to using the stop loss on a short stop loss like that. Okay, but we'll see. We'll see what happens here. And we'll probably see that these are starting out in the negative, which is the case, which doesn't surprise me, given the downtrend that we were seeing. But that's my point here, is to show you there are different ways to risk manage a trade. And sometimes you see a nice support level, but you understand that you're fighting a trend. And so you want to maybe protect something in a different way, maybe diversify your protection strategy, which is what we did on those trades there with Euro USD. Now, we also could go to the German 40, the DAX, and take a look what's going on there, because a lot of the global markets tend to move the same direction at the same time a lot of times. And what we see here is it doesn't have to be a US index. It can also be European, UK, Australian, and we see that they're all kind of selling off a bit, trending in the same direction. Okay, breaking support levels, which it just broke here. Okay, we can slide this line down. That's a broken support where it was a support level in the past, and here we are below it. Okay, so this is a strong current downtrend. So I would caution trying to catch low points to buy from, unless you do the technical analysis and start to look at larger candles, and then you see, okay, I do see a support level down lower. Okay, it broke this one, which was established just today. this support level on the 30-minute candles that we were looking at. But when we go to the 1-hour candles, we start to see earlier in the week and into last week a support level here from last Friday that held and then went up, and then we had the gap up at the open this week. So really this is working its way down and looks like it's trying to test the support level from the end of last week. So as you look at larger candles, you start to gain a different perspective, okay? So if you feel like this sell-off, you understand why there's a bit of fear, but maybe you also feel like there's nothing new there. You know, it's not like something happened today that was unexpected. So then you might say, okay, I understand the fear, but I also maybe understand why this support level from last week, last Friday's support, might hold, might be a spot where it's opportunistic to try and take a shot to buy from if you trust the support level here, okay? So I start to look and I say, okay, there's a support level here. I don't have to risk much to get my stop loss below that. The question is timing. Do I trust the support level when there's such a strong downtrend? And you know what I would surmise is I would be patient if indeed I wanted to buy on this, and I would wait to see if the smaller candles start to uptrend off that next support level. Okay, so I'm looking at 5-minute candles, I'm looking at 15-minute candles, and I'm trying to find this support level down below, which is here. This is what we just drew on the 1-hour candles, where if you go back in time, you see that was a support level here last week. This was Friday, holding, and then upward, and then gap up this week. So here's that support level. And so then you compare that to where that is now. It's trying to bounce off that, but it hasn't made up its mind yet, right? Looks like there's downward momentum. So what you can do in a situation like this is say, okay, if it uptrends again, meaning if it not only bounces off this support, but goes back above this little bit of resistance, which was the other support that it broke, okay? This was support, and now it broke below there. So you could be looking at this and saying, if indeed it breaks back above and starts an uptrend on the smaller candles, then I might be interested in buying. So if it goes above, say, 23,050, this area, then you could have a pending order to buy. That way you're not buying in a downtrend, you're waiting for it to become an uptrend on the smaller candles, but you are still buying from an opportunistic entry point that's not far from a nice support level in the bigger picture. Okay, so waiting for it to break above the nearest resistance, which was this broken support, to establish an uptrend again on the smaller candles, then maybe you're convinced this could continue to climb. So 23,047 might make sense, which we'll round it off and say 23,050 would get us into an uptrend on those smaller candles. That's this line here. Okay, that would be back above this broken support level. So rather than buying in a downtrend, you wait for it to become an uptrend on the smaller candles, and then maybe that convinces you that it's time to make that move. Okay, so in that case, we use a pending order. So wait, let me expand that and we'll go right from the chart here. So if I'm buying, but I only want to buy if it establishes an uptrend again, so then now I'm going to say execute when price hits, and only if it goes to 23,050, then I want to buy, okay? Why? Because on the smaller candles, then it means this downtrend at least paused and became an uptrend on the smaller candles, establishing a reversal at least temporarily on that downtrend. And if it just keeps plunging and breaks this next support level, then you never got in on it. You weren't fighting that trend. You were waiting for the trend to reverse, okay? So take profit then could be up at this next resistance level, which is 23,240 or so. So take profit 23,240. Okay. Stop loss then, if I'm entering at 23,050, my stop loss could be back below this price level here, which then could be 23,000 even, or just below, back to where it is now actually, 22,000, let's say 990. So stop loss back below that 23,000 level to get back below this level. So it would have to establish a downtrend again in order to get out, okay? So with that setup, we've got better than 3-to-1 ratio potential profit to risk, okay? Even waiting for it to reverse into an uptrend and without even needing to break this resistance level that it was just at a little while ago today. So once we have that set up, now we just need the right trade size to be the amount of risk that you're comfortable with. I'm going to change the trade size until I get to around 500 is the number I tend to use with this account balance. So I'm trying to find a risk level that's appropriate for the balance and for my risk tolerance. You can risk more than 1%, less than 1%, but you should at least know how much you're risking per trade, and this makes it easy. So this is less than 1% of the balance here, going after more than 3 times that amount, greater than 3% profit. And again, that is not an open trade yet. This will only open if this reverses into an uptrend. Okay, going back above this broken support here. If it goes back above there, then maybe the momentum changed and this trade will trigger as a buy with a short stop and a longer take profit, because that's the way the technicals set up then, with the resistance further away and the support closer. If it enters up here, if this keeps crashing, then we'll be happy we didn't fight the downtrend, right? That's why it makes sense to wait sometimes for a reversal. Even if you like the entry point, you say, oh, I want to buy from this low point. A lot of times it makes sense to wait for a technical reversal with your technical analysis to go back above a broken price level to establish a reversal in momentum before you jump in, because this could just keep crashing with that much downward momentum showing. Okay. Any questions, comments? I'll pause for a moment. Okay, and I'll jump in and answer questions if any pop up. Now, if you're looking to try and pair your technical analysis with recent fundamental news, okay, there are signals that you can find in the market buzz area. It's found here in Discovery. If you go to the market buzz, which is a fundamental news feature, we cover it a little in a bit more detail in my fundamental analysis webinar. But I want to make sure those of you who are doing technical analysis understand, and you can look at any type of instrument that we offer, currencies, commodities, indices, stocks, and whatever's trending the most has the biggest circle in the pictogram. And I can pull up any instrument by clicking on it. And not only does it give me the most recent news, which then you can click and read the articles to see, well, what's happening right now fundamentally, but here's the most recent signal from Trading Central paired with the recent news. So you could read the most recent articles and see if it's good news or bad news. And in this case, since the signal is saying Apple may fall 11% or more, and you can see the technical analysis here. There's the technical signal. There's the price levels for taking profit. Here's the pivot line in case it establishes an uptrend. They say maybe you get out of the sell at that point with looking for take profits up higher then. So you got all the technicals here. You've got which indicators were used. You've got the key price levels listed. So all the technical breakdown is here, right next to the most recent news. So if this is telling me sell on the technicals, and then I read articles, and maybe the articles are bad news for Apple, then maybe I trust the signal more. Or the opposite, if I read, hey, really good headlines for Apple that just came out, maybe I don't follow that particular signal then, because the news would be working against the technical signal that came in prior to that news coming out. Okay, so nice set of tools here to combine fundamental news, the most recent news coming out about a particular trading instrument, and the most recent technical signal to see if they pair together. And if they mesh together, then maybe you trust that signal more, like I said. I think this is a good place to stop. I don't see any questions popping up. I think we clearly see the trend today. There's fear in the markets, whether that's fear of tariffs, fear of recession, it's there. And we're just waiting to see if this might keep dropping, or at some point here we get a bounce, we get a reversal. And some of what I showed you here are ways to deal with if you feel like that reversal's coming and you want to trust some of those support levels that we looked at in this case, then maybe using AvaProtect is a way to do that when you know you're fighting the trend, but maybe you think the bigger picture it should reverse. And you know, the situation being that you can be more patient with AvaProtect. And then also the other method of that would be using a pending order that's a little higher to wait and make sure that it reverses the trend before you enter. That's two different ways to handle the same situation. One costs you a little money with AvaProtect to get in now. The other doesn't cost you any money, but you just give up a little bit of entry distance by waiting for it to reverse and establish the opposite trend before deciding to enter. And in this case, we're looking at that because there are such nice support levels below on those major indices that it looked like a spot that maybe those one-day candle support levels could hold. But because we're working against the overall trend, we're finding unique ways to risk manage it, either waiting for a reversal to get in or a couple days protection, as we showed with AvaProtect, is another way to do that if you feel the reversal's coming, but it might not be right now. And so some unique ways that you can trade when you're using our web trader and our app, where you don't see other places with something like AvaProtect, with that kind of flexibility for protecting trades. All right, everybody, thank you for joining. I'll call it an evening for now. My session tomorrow is a bit earlier, 11 a.m. UK time, for a fundamental analysis webinar. You're welcome to attend or catch the recordings on our YouTube channel anytime. All right, everybody, have a good rest of the evening. Bye for now.